Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INNOVEX International INC quarterly report. INNOVEX International Inc. offers a diverse range of businesses and services to the oil and natural gas industry worldwide. These include designing mission-critical engineered products, manufacturing cementing and casing products, selling these products to various clients, renting out these products for use in drilling environments, providing products for well construction, completion, and production, offering intervention services for onshore and offshore oil and natural gas wells. The significant increase in INNOVEX International Inc.'s stock price over the past year can be attributed to several key news events. The company's strong fourth quarter and full year 2024 results, including a 65% quarter-over-quarter revenue increase and $32 million in net income, set a positive tone for investors. Additionally, the acquisition of Downhole Well Solutions, DWS, and SCF Machining Corp., as well as the realization of merger cost synergies, further boosted investor confidence. The exclusive wellhead partnership with OneSubsea and the completion of the Drillquip Eldridge facility sale also contributed to the stock price growth. However, it was the third quarter 2025 earnings beat estimates that likely had the most significant impact on the stock's performance. With earnings exceeding analyst expectations by $0.28 per share and revenue increasing by 58.1%, investors were encouraged to buy into the company, driving the stock to a new 52-week high. The primary drivers of revenue growth or decline are multifaceted and influenced by various market and operational factors. On the growth side, key contributors include the acquisition of Citadel Casing Solutions, LLC, increased market share, and organic growth through innovation and development of proprietary products. Additionally, collaborations with customers to solve operational challenges have also contributed to revenue expansion. Conversely, revenue decline is primarily driven by a decrease in North American onshore rig count and reduction in drilling activity in the region. The decline in net income as a percentage of revenue and adjusted EBITDA margin also indicate a downward trend in revenue performance. In terms of geographic segments, North America remains the largest contributor to revenue, followed by Europe and Asia-Pacific. However, the growth rates vary across regions, with services and rental revenues experiencing significant increases in 2025 compared to 2024. Net income and profit margins experienced significant declines in Q3 2025 compared to the same period in 2024. Net income decreased from $82,586 to $39,228, a drop of $43.4 million. Profit margins also plummeted, with gross margin falling from 34.6% to 16.4%, and operating margin decreasing from 52.7% to 25.9%. The net income as a percentage of revenue dropped from 54% in 2024 to 16% in 2025. The primary reasons for these changes include discrete items recorded in the first half of 2025, changes in projected earnings mixed by geography and tax jurisdiction, foreign withholding tax, and non-deductible expenses. These factors contributed to a $39.2 million decrease in net income from YTD 2024 to YTD 2025. Interestingly, despite these declines, revenues increased by $294.4 million, while cost of revenues rose by $218.1 million, and selling, general and administrative expenses increased by $18.9 million. This suggests that the company's revenue growth was not sufficient to offset the significant increases in costs and expenses, ultimately leading to decreased net income and profit margins. The company is generating a significant amount of positive operating cash flow, with notable figures including a net cash provided by operating activities of $138,674,000 for the 9 months ended September 2025. Positive operating cash flows in both the 3- and 9-month periods, totaling $69.3 million and $148.1 million respectively. These numbers confirm that the company is successfully generating positive operating cash flow, indicating a strong financial position. The company's financial health has shown a positive trend in recent years. A significant decrease in debt levels is evident from the data, with long-term debt decreasing by $4,811 and total indebtedness dropping to $26.4 million as of September 30, 2025. This reduction in debt has led to a corresponding decrease in interest expenses, which have dropped by 6.7% and 7% for 3 and 9 months ended September 30, 2025 compared to the previous year. Overall, the company's debt level and interest expenses have changed significantly, indicating improved financial stability. Management is optimistic about INNOVEX's future prospects, aiming to become a global leader in well-centric products and technologies through innovation and strategic acquisitions. The company believes it can create value for shareholders across various market environments with its through-cycle playbook. Despite a decrease in adjusted EBITDA and margin, the return on capital employed (ROCE) has increased to 13%. Management expects sustained growth due to factors such as underinvestment in oil and gas development and growing energy demands. The company is also focused on maintaining liquidity through working capital management, capital expenditures, debt service, and potential mergers and acquisitions. The company has made several strategic moves through acquisitions and divestitures in recent years. Acquisitions include the purchase of Citadel Casing Solutions, LLC for $69.7 million, a merger with an undisclosed entity, and the acquisition of an additional 80% equity interest in DWS. These transactions demonstrate the company's commitment to growth and expansion. On the other hand, the company has also divested certain assets through the sale of Eldridge Facilities to Big Acquisitions LLC for $90 million. This strategic decision highlights the company's ability to adapt and optimize its operations by shedding non-core assets. Legacy INNOVEX has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, the company has a history of paying dividends, with a notable instance being the payment of $75 million in cash dividends to holders of Legacy INNOVEX common stock on September 6, 2024. Secondly, the company has also engaged in share buybacks, allocating $9.3 million towards common stock repurchases as per page 31 of the financial summary. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights a pressing concern regarding inventory buildup. As of the 3 months ended September 30, 2025, inventories have reached $758,000, indicating an accumulation of stock that may not be selling quickly enough. Furthermore, the confirmation on page 20 reinforces this issue, suggesting that the company is struggling to manage its inventory levels effectively. This buildup can lead to supply chain disruptions if not addressed promptly. Excess inventory can tie up capital, occupy valuable storage space, and even become obsolete if not sold in a timely manner. To mitigate these risks, the company must reassess its production and distribution strategies to ensure that they are aligned with market demand and consumer needs. That concludes the financial summary for INNOVEX International INC. Feel free to comment below, and I will be happy to answer them when possible.